Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, rate cuts, hopes trigger rush into risky assets, as well as that Hamas releases 2 more hostages as mediators push to extend fragile truce. But we've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around till you see that. But before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is investors piling into risky assets. Now, investors are piling into risky assets as in belief, that the Fed and other central banks are likely to win the battle with inflation and are winning the battle with inflation, with this fueling the biggest rally in global stocks since the early stages of the COVID lockdowns. Now, we've been covering kind of the topic of, the Fed and the ECB, their levels of inflation and interest rates quite extensively. And, looking at what's been happening, and yesterday we did note the fact that, Eurozone inflation rate was being released today. And we had noted that in the most recent kind of inflation data releases, we have actually seen, inflation come in under expectations, and therefore, kind of provide a positive boost for markets as people start to perceive the central bank, whatever that be, maybe that be ECB, Bank of England or Fed, to start cutting rates. And so with today's release of inflation presenting a lower figure for Eurozone inflation than previously expected, that's why we're now seeing everyone pile on even greater now to rate cut hopes, as only last month we saw that dramatic kind of for the month of November actually. I think the US inflation did come in below expectations then as well, and we're also seeing that happen within the UK. And so this is all kind of wounding up into a global kind of view that this kind of period of high inflation, where high interest rates are going to be required, is no longer going to be the case, as we may now see, with the growing belief being that rates in the US and Eurozone have peaked and are soon to be cut further, with the MSCI's index of global equities up almost 9% this month, marking their best month since November of 2020. Now, that's very significant to note, of course. If we're talking about best performance since times nearly 3 years ago now, that is something that has to be noted as something that's very, very bullish for the markets, of course. With obviously most recently stocks kind of struggling as a result of interest rates being quite high, and we weren't actually that sure on when interest rates were starting to would start to come down, with not even a month or two ago, us right here discussing the issues around the Fed and its interest rate policy, with many starting to speculate back a month or two ago that the Fed would raise rates by 0.25% this time this year. So the last meeting of 2023 was expected by some to see the Fed raise interest rates further. So we weren't even thinking at the time that we were at the top of our interest rate peak. And this was the same for the Bank of England. If we think back to a month or two ago, once again, we were talking around that time about how the Bank of England was probably going to raise rates further, but now there was kind of some speculation that rates weren't going to be raised further, and we were kind of a bit surprised, or at least kind of taken aback by the fact that Andrew Bailey, the Bank of England governor, was making the clear statement that rates weren't going further higher, and so kind of this is all quite new news in relation to inflation coming down and pushing stocks higher, which is what we're now seeing. Now, in the US as well, the S&P 500 and Nasdaq are heading for their best month since July of 2022, with this bullish momentum pushing further following, Eurozone inflation falling to 2.4%. And that's what we were just talking about. That 2.4% figure is very, very low, with I believe that, the forecasted figure actually being around, 2.7%. And so to see inflation come all the way down to 2.4% is very, very significant, considering the fact, that inflation, that kind of 2.4% figure is very, very low when we start to consider the fact that, the Bank of England's and the Fed and the ECB's, I believe, target rate for inflation is 2%. And so if inflation is already down to very, very close to that figure, then we could be expecting rate cuts very, very soon. Obviously, we have heard that kind of cautious rhetoric from individuals within the Fed, like Jerome Powell, which has noted, he wanted to see long-term data before the Fed was to cut any interest rates, and they weren't even thinking about it at the moment. But ultimately, the inflation data doesn't lie, and if we are seeing that lower level of inflation, then there is a high chance that policymakers start pushing for those lower levels of interest rates. Now, the rate hikes that had previously been pursued to temper inflation have been a dark cloud over risk assets, but now inflation is coming down. Rate cuts are expected as well, with the futures market now pricing in a first quarter point rate cut by May. And that's very significant, as previously we were only expecting around August, then it was, July, then it was June, and now we're even expecting, rate cuts as early as May, which is very, very significant. Now, this increase in risk appetite has spread to corporate bond markets, with $17 billion flooding into corporate bond funds in November, with this being the sharpest monthly inflow since July of 2020. Now, with that demand driving down borrowing costs for the riskiest companies, of course. And in a further sign of optimism, the VIX is around its lowest level since the pre-pandemic levels. And what is the VIX? Well, that's kind of the volatility index, which tracks, US stock markets, to see, what's the level of fear within the market, and lower levels of fear, create that kind of bullish sentiment. And that's what we're seeing now, of course. But next to talk about, of course, is Hamas. So keep your eyes on that article, but this article is very important to cover as well. Now, Hamas releases 2 more hostages. Now, Hamas released 2 more women held hostage in Gaza as the deal, as this fragile deal does continue. Now, this comes as the delicate exchange brokered by Qatar enters its 6th day, with 10 Israelis being expected to be released from captivity on Thursday. And this comes as Antony Blinken met Israeli and Palestinian leaders in a push for an extension to the current ceasefire in order to facilitate the release of more hostages. Now, we covered this yesterday, of course, and it was a very important kind of topic to discuss, as we are kind of now in the first day after, the initial period of ceasefire that was agreed upon. And this is very significant because, we do have, as we spoke about yesterday, those more far-right members of Netanyahu's government, which are kind of pushing for an end to the ceasefire agreement. And they don't want any of more of these deals with, who they believe are terrorists. And so we're in this kind of difficult situation, of course, as the hostage families are calling for an extension to the truce so they can get more of their family home. But we also have the allies of the current government pushing for an end to negotiations. So it's really hard for Netanyahu to deal with. And obviously we've been seeing Antony Blinken involve himself greatly with many of the Arab powers, most recently on his regional tour, discussing the issue with many powers to kind of lay out the US's image, what they're looking for, as we've heard from Antony Blinken before, that he's looking to allow for the Palestinian Authority to establish its rule once again after Hamas is eradicated from the territory of Gaza. And with that, of course, would have to come secessions from the Israeli government to do that, because I'm sure there are many government ministers within that that would be against this sort of policy of, kind of meeting this agreement. But at the same time, we could also expect that from the more pro-Palestinian side, with obviously the potential of a cause of conflict between Hamas and the Palestinian Authority once again. And so Antony Blinken's trying to, kind of play this game and, walk this tightrope to establish kind of a better solution for both sides. And as we know, Antony Blinken throughout this conflict so far has been pushing for a temporary ceasefire, like we're experiencing now, whereby, hostages can be released and also aid can flow into Gaza, as that's been a key thing that he's been calling for. But at the same time, Antony Blinken's kept the same rhetoric in relation to Israel, making clear, the US's support for Israel throughout the conflict. With previous exchanges having 10 Israeli hostages for every 30 Palestinian prisoners being exchanged each day. Blinken also told Netanyahu that Israel must account for civilian needs in southern Gaza, as this is the territory, or part of the territory, which civilians within the north of Gaza did evacuate to, as demanded by Israel once the ground operation into Gaza did begin. Now, Blinken also did meet President Mahmoud Abbas in Ramallah to discuss issues, with Netanyahu now in a very tough position with pressure internationally but domestically also, with families of the hostages calling for a longer ceasefire and pressure from far-right members of his coalition which oppose any new deals with Hamas, with Netanyahu confirming that the military campaign will return after this short stage, and about 100 people have been freed over the past week, with more than 200 Palestinians released, whilst allowing more humanitarian aid to enter Gaza freely. But if Hamas does not offer up more women and children, the ceasefire will end at 7 a.m. local time today. So by the time you're watching this video, we will know whether or not Hamas has enabled the exchange of further civilians. And if that has not taken place, then the ceasefire would have ended and it will be back to conflict for both sides. So keep your eyes on this, and this kind of conflict has been pushing global markets greatly, especially gold, of course. So keep your eyes on this topic most definitely. Next to talk about though is the charts. Now, firstly to talk about on the charts is US indices, with US indices obviously off the back of that first article which we did talk about, having that strong bullish momentum yesterday, with, as you can see here, the US 30 making a significant push to the upside. Now, yesterday when we last talked, I did note the fact that the US 30 in particular was experiencing some lack of momentum and slowing down price wise, as we can see here. Although the US 30 had been taking moves to the upside, it had been moving in ways which presented a lack of momentum, and encountering this area of liquidity and resistance, it did seem to struggle. But that said, going into yesterday, the US 30 did find that momentum, as I spoke about on the first article, in relation to increased hopes that rate cuts will take place sooner than previously expected, and this is creating that push to the upside for US indices as a whole, because people do then start to price in those lower interest rates which benefit companies for growth, and that's why we're now seeing this kind of push to the upside. So keep your eyes on this, as speculations do flow around rate cuts or not. Next to talk about though is the dollar, which has actually retraced to the upside today or yesterday, following, of course, and also I'm not sure what following, but I guess in response to the lower than expected Eurozone interest rate, as lower than expected, inflation rate, I should not say that, but ultimately the fact that Eurozone inflation was lower than expected causes the euro to fall, and as a result providing that kind of bullish momentum to the dollar as people move their money out of the euro and put it into the dollar, as people now expect, of course, the ECB to cut rates very, very soon in relation to that inflation rate being so low now. And as a result, we've seen that bullish momentum on the dollar, as we can see here. But the question is, how long will the dollar kind of remain with this bullish momentum, as we are currently coming into contact with this short-term downward bearish trend line, as I've noted here. And if price does, of course, react to this area, then we could see a continuation to the downside. And as I've drawn out here, if price does react to this trend line, we could be forming a bearish channel to the downside, and that will be interesting to see how that works out, as the dollar continues, or at least most recently did make those 3-month lows. So keep your eyes on the dollar. Next to talk about though is Euro USD, which obviously today, following that lower level of inflation than expected figure being released, we did see a sell-off on the euro, despite euro breaking above previous highs most recently. And so it's kind of interesting to see how we were noting that this was a possible area for a move to upside to take place from. However, we have seen a sell-off from that area, and we've actually seen price move all the way down and into this previous area of liquidity and support that we've previously noted. So it'd be interesting to see how price can now react to this area. Obviously, we've kind of dipped below this most recent trend line as well. So it'll be interesting to see what the euro can do. We're sitting around the 38.2% Fibonacci level, so possibly that plays into some bullish momentum to the upside from where it is now. But of course, if it does break this key area of low, I would say this is the most significant low area on the market at the moment for Euro USD. If price does break below that area, then we could be expecting further continuation to the downside for price. So that's the key area to keep your eyes on, and it does line up with price sitting on the 78.60 Fibonacci area as well. So keep your eyes on this. Next to talk about though is pound yen, which we can't say too much about, but the fact is it did come into contact with this area of liquidity that we noted yesterday, which we noted would have a strong area of kind of support, and price does seem to have reacted in a somewhat bullish manner from it, but not too much momentum to the upside from that area, and thus we do need to note that price is kind of consolidating here, so it'd be interesting to see where pound yen can go. Next to talk about though is USD JPY, which has tapped this area of liquidity in a retracement move to the upside. Now, we did note that USD JPY was struggling to break these prior lows and make a significant move to the downside, and therefore has made that retracement to the upside. The question is, now that it's kind of tapped this area of liquidity, will price continue to run to the downside, as it's now kind of tapped this 61.80 Fibonacci area as well. So it'll be interesting to see whether price can make a significant move from there. Next to talk about though is Bitcoin, well, not Bitcoin, but gold, in fact, which obviously we spoke about yesterday as an asset which has taken a significant move to the upside, strong bullish momentum throughout this week, but has actually now started to consolidate around this area of liquidity that we noted, and around that 2040 area and 2045 area, of course, and 2050 area. And so price has been kind of halted around this area. So keep your eyes on gold to see where it might go. Possibly it will retrace further before moving to the upside, or in fact it will continue to the upside, or just consolidate longer. So keep your eyes on this. Lastly, to talk about on the charts though is Brent crude oil, which has been highly volatile yesterday, and has seen great moves to the ups and downsides. Now, Brent crude oil was moving in quite a bullish manner throughout this entire week, as we can see here, tracking it from Monday, where it went from lows on this trend line all the way up until this area of prior highs and resistance and liquidity, and has seen a significant sell-off from that area in a move to the downside, and is now come into contact with this counter trend line, which is very bullish, And so it'd be interesting to see whether Brent crude oil can react to this level in a very bullish manner. So keep your eyes on this. But that's all to talk about in the charts. Lastly to talk about, of course, is the economic calendar, with quite a lot of data to come out today. So we'll listen out for this. Now, firstly, we do have Swiss GDP growth rate figures being released, as well as Eurozone, German, French, Italian, Spanish, and Swiss manufacturing figures being released as well. So lots of manufacturing data for the Europe to be released. So try and gain a good picture of all of that to understand where manufacturing is within Europe. But generally, we're expecting, for the most part, more positive manufacturing data for most European nations today. As well as that, we will have Italian GDP growth rate figures being released, along with the British manufacturing figure being released. As well as that, we will be getting the ECB's President Lagarde speaking today, along with other ECB officials speaking as well. As well as that, we will have Canadian unemployment data being released, as well as the US and Canadian manufacturing figure being released. And finally, and most importantly, we do have Jerome Powell speaking today. So, off the back of the lower than expected ECB inflation figure being released yesterday, it'll be interesting to see how Jerome Powell kind of responds to that, maybe, or responds to the general economic picture of the USA at the moment. So listen out for this to understand a better understanding of US monetary policy, of course. But that's all from us at Wildwood Capital. I hope you have a great weekend as well as a great trading day today. But as we go into this weekend, enjoy it. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.